Yeah, you're good. Thank you.
Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 16th of September, and Brent crude oil is trading, I would say, little change this morning in Asian trade. It's up a few cents, essentially standing still. Um, Not that there isn't a lot of things happening in the world that you would think normally the energy markets would be alert to and reacting to, but the oil price continues to be in a fairly tight bandway at just 65 and above. It seems ping pong between 65 and $67 a barrel. Let's start this morning in Belgium with Laurie Hitayen, MENA Director at the Natural Resource Governance Institute. Laurie, I wanted to get your opening thoughts. It's a week now since Israel had its a military strike on on Qatar, the first time ever that Israel has had a military strike on a GCC state, a historic event, and yet it has passed a week later, it seems, even with the Arab Islamic Summit yesterday, with very muted response from the Arab world. Your thoughts of this event a week later, and does it still have ramifications?
So good morning, Sean, to you and to all. Basically, reaction. There were like quick reactions of support to Qatar and publicly condemning what Israel has done on the Qatari soil. And then very quick after 1 week, they had like the Arab and Islamic summit. That is a good rapid reaction, knowing the past of the Arab and Islamic summit. So reaction is like it is basically putting what I take out of it is there is a blame on the Israeli government, and many of interveners they try to make sure that Israeli public is something and the Israeli government is something else. So putting all the pressure on the Israeli government and asking the Israeli people to take action and to get rid of their government. And this is like really something that was standing out there, so that it doesn't feel like this is against all Israelis. By extension, this is against the Jewish communities or the Jews of the world. So this is against the Israeli government that is the most extreme government, according to the summit. The other point that I take is like they waived the idea of we want to review all the accords with Israel, but they didn't go far to cut relations. And this is like understandably Egypt, even though Egypt is under pressure, cannot cut relations with Israel, and Jordan, that is again under pressure, cannot cut relations with Israel because they do have dependency. Only if we want to discuss about energy dependency, half of Israeli production is exported to Jordan and Egypt. And we all remember when the Israelis had to shut down one of the fields early on when the war started in after 7 October. There were implications on the electricity sector in Egypt. And today Egypt is under pressure because it needs to import as much as it can of gas, LNG or other sort. So it is really difficult, just on that point, difficult to really cut relations because it will have implications.
But
So
in terms of
basically,
the ultimately the ramifications for the oil markets have been very muted. All I mean, obviously there's the big geopolitics here, but the oil markets generally. Let's move to Iman Nasri, Managing Director, Middle East, FGE Nexant ECA here in Dubai. Iman, generally the oil markets are telling us this is not an event that they're concerned about. Ultimately, they don't see any risk to supply coming out from the Gulf region, even though one of, if not the world's biggest LNG exporters was hit.
It is nothing new against. I mean, this whole debate of Israel efforts in the region has been with us for many, many years. This is a specific attack, I don't think, by the industry. And I talked to many people, as perhaps you did, Sean, in Singapore last week, as it happened when we were busy partying with the oil companies in the APEC receptions. Everyone, well, those who I talked to seemed to be in agreement with me that this wasn't necessarily a conflict between Israel and Qatar. Many people even went as far as telling me that they believed that this was, in a way, coordinated, meaning that it was telegraphed and it was basically not necessarily.
Well, whatever delusional story was shared over glasses of whatever in Singapore, this was an unprecedented historic threshold cross. Israel has never bombed a GCC country before, and earlier, obviously, this year we had Israel and Iran in its first sort of open war. These are two fairly major events. Yes. The oil markets doesn't seem to be recognizing that we've made any kind of shift here.
Because no one so far thinks that it is a threat to the Qatari supply or the supply coming out of the region. Even when it came to, when it was an actual war, 12 days going back and forth, tens and hundreds and in certain scenarios, thousands of rockets flying over the region between Iran and Israel. The $10 premium that we had was not necessarily a reflection of 2.5 million barrels per day of supply. So it was a risk premium. But in this case, I think the message is that no one assumed in the market that it is putting the Qatari LNG supply at risk.
Charles Elinas, CEO of Cyprus Natural Hydrocarbons Company and Senior Fellow at the Global Energy Center at the Atlantic Council. Charles, thank you for joining us again. If events of this level, obviously temporarily spiking prices perhaps, but ultimately not any disruption for the oil markets or giving the oil markets a new direction. Charles, events this week we have now, last week we had the events of OPEC Plus increasing supply announcement, or another month we had obviously the attack on Qatar. Oil markets didn't really react to either in any pronounced way, not breaking out of any range we've been in. Will the events this week now, we've got a number of rate exchange changes expected. Four of the G7 central banks are to announce their rate policy for the coming period, with the leader obviously being the Fed. Will that shift the oil market in a new direction?
It probably will, but I don't expect that there will be any major shifts in the oil market as a result of these rate changes. I think there is a view that there is surplus oil in the market, but there is also a view that the market is very tight in the sense that spare capacity is very low. So, and then on top of that, we have the problems, the geopolitical problems in Ukraine. Ukraine is now bombing oil installations in Russia everywhere, causing problems in Russian oil and oil product supplies. All of these things, I think, cancel each other in a way. And the net result means that the market is unsure which way things are going to go. And we have this, as you said before at the beginning, this band of oil prices that seems to be remaining steady and probably will carry on remaining steady for a while yet. as a result of it.
Laurie, as we look to these two big sort of centers of conflict, the European war, Russia's war on Ukraine, Israel's war on Gaza, and many other countries, alongside both of them is the US, and the momentum for resolution of either of them seems somewhat muted, occasionally words of significance, but ultimately not amounting to much. Where is Europe at now? You sit in Brussels. Does it feel like there's any real momentum there other than manage the status quo to change either the policies in the disruption, the war in Gaza, or the war in Ukraine?
Look, so basically, President Trump has been putting pressure on the allies. So it started with
the allies. Is that what they're called now? The allies.
It
seems nearly romantic. You know, it's like you expect a violin to come out and some nice shots of a French lady in the Second World War and the allies.
Look, so the friends of America. So
the friends. Oh gosh. Okay. All right.
So he has been putting pressure on.
So that's the general narrative in Brussels, is it? The allies, the friends, they're holding on tight to these words. They still have meaning.
Yes, and this is like me, Middle Eastern, sitting in Brussels. So,
a Beirut refugee looking for friends and allies.
Exactly, and being optimistic. Look, basically, what we see is like President Trump has been putting some pressure on India, right? We know that he has been putting pressure, saying that you have to stop buying Russian gas or oil. And then he started...
And to Europe now, right?
Exactly, that's where I'm coming. And now the allies and friends, European, already they are under pressure because of the war. Now he's putting pressure on them, saying, you guys as well, you need to decide unanimity and have a consensus about not buying Russian oil so that I can take action as well. So now he's putting more pressure on the Europeans. Already they are like having already so much pressure because of the war. And then once you say that you go decide like to stop buying Russian gas, Russian oil, so you're creating these divisions, or you're highlighting the divisions between the European member states. Hungary, Slovakia, Czechia, that have been for since 2022 kind of special status. Okay, they need to they are still buying this oil from the Russians. So now you're breaking into you're creating division, and this is what you
and you still have many countries also buying LNG from Russia.
Yeah, and then the LNG. So the Minister of Energy, or I don't know what they call it, the state of whatever, I don't know what they call it in the US. He was
Secretary of Energy.
Secretary of Energy. So he was in Brussels. He met with Kaja Kallas, and then again, talking about you know what, you have to phase out very quickly out of the Russian gas and oil, and you don't need to wait until 2027. So putting pressure as well on the gas, saying, of course, that you can buy our gas. So and anyway, you have signed a deal with us to buy all these amounts, humongous amounts of gas. So why don't you start it now? So there's a lot of pressure on the Europeans today because of this, because President Trump doesn't want to take direct action that has impact on the supply, and because that will mean raising the prices. I don't think how much he wants to see a high price of oil, because now he's so happy that the Fed is going to cut the interest, and he thinks that this is going to flood money into the economy, and he doesn't want to see another problem, which is high prices, etc., even if later the high prices will come, but now he doesn't want to see that. So pressuring Europe, creating some cracks again in the European between member states, that is dangerous. And then he's doing the same and putting pressure on Europe, go put sanctions on China, put sanctions on India, put sanctions here and there already, or tariffs, or etc., raising tariffs. Already Europe is under pressure because they need to spend on defense. Now that President Trump doesn't want to spend on defense or defend them. So under pressure, you don't need a divided Europe now, because that will create other sort of problems, social problems, or maybe this is what he wants because we're seeing what's happening.
Well, it certainly seems that it's always a good distraction to get the Europeans sort of busy talking about nonsense. Iman,
Ron, first
it
time
would,
I get excited about talking about European politics. This is my first time, so I remember this session.
Iman, it would appear that once again the oil markets don't believe that this recent surge in sanction efforts and sanctions on or trade tariffs on India or any of this noise, Trump trying to get the Europeans on board, which probably is more smoke and mirrors. The oil markets don't believe it's going to do anything to disrupt the continuous flow of the full opportunity of oil coming from Iran, coming from Russia, etc. Your thoughts on the market's reaction to all of this elevated noise recently on India and others?
Yeah, certainly. As a preset to this, and going back to your starting point, Sean, the prices have remained resilient in the $65 to $70 range. And what I want to emphasize here for the audience is that there are three factors really that matters. One is fundamental of the day, the data that are like hard data that are out and people can rely on, which is 1 or 2 months lagged. And basically what we have is the most comprehensive or the representative of the balance in the world is the OECD crude inventory and company stocks. All of those numbers so far have remained very, very tight. They all had historic low levels, the inventory levels, and that shows a very tight market today, fundamental of the day. Then people start to look into the future, 2 months down the road, 6 months down the road next year. And then they start to see a length coming. But there is a lot of debate on assumptions built into that. Yet there is a downward pressure if you look into that. And then the third layer is their fear factor and geopolitical risk premium that comes on top, which in my opinion, this one has become a little bit like the market has become numb because of too many political uncertainty and geopolitical risk in there. So they don't add necessarily on top of each other. They are all kind of combined in one basket. Hence, what I think is that the market is looking at all these three and perhaps a weighted average of these, which keeps the price kind of in this range. Now, going into your one of the parameters, in fact, is whether the market believes that Trump and the allies or friends want to remove Russian barrels from the market. So far, the message has been no, they did not really want. They started with the price cap. The intention was clearly no removing barrels, physical barrels from the market, and that's what has happened. Now they are going into another tier of sanctions, and we have seen that on Iran. The fact is that sanctions are not easily working unless the US wants to go into a much bigger conflict with some of the economies in the world, namely those who are buying the sanctioned barrels, China and India when it comes to Russia and Iran and Venezuela, but also the facilitators, which are some of the countries in the Gulf, as well as Turkey and a few other countries, which are kind of land for exchange of these barrels and redocumentation. So bottom line, I don't think there is huge consensus and belief that the sanctions work, or they are designed to work. They are more to increase the cost, and they do that. I can tell you that when it comes to Iranian, the discount received or the receivable amount by the government is a lot less than the nominal price on the market. So that is what they do, and as long as the barrels are in the market, I think the market remain doubtful about the efficacy of these sanctions.
Charles, if we're not really, the market's not really disturbed by the geopolitical risk to supply, they're not concerned that much about the noise of sanctions and so forth. Is the trade war still something? I mean, we've gone through 6 months of it now. Are we absorbing that as well as just another part of the noise of the Trump era? And yet its ramifications, tariffs 10% here, 20% there, whatever it adds up to. It's not the financial markets are on another high every day. Is the trade war, the Trump tariffs, etc., wherever they may be landing around the world, are they a factor still to play out for the oil markets, do you think?
I don't think so. I think globally the tariffs are now seeing as having a small impact, but not a massive impact. As you said, the stock markets are going up and up, ignoring that completely now. And with Trump coming almost daily with new threats, new tariffs, everybody has gone blasé about it. I mean, everybody has had enough. It's becoming background noise right now. And there are other major factors that have an effect. I mean, in Europe, obviously, the impact of tariffs is still to be seen, and there is concern. There is real concern. Even Draghi was dragged into it when he said that Europe needs to get this act together, because having given in on Trump on tariffs, it risks the words he used is that it faces irrelevance or worse as a result of giving in to Trump. But Europe is facing also major other problems. The major countries, France, the economy is in tatters. There is effectively no government. The German economy is going downwards. Netherlands has no government, and Poland is now divided between a president that pulls in the far right direction and a prime minister in the opposite direction. So Europe is paralyzed and not responding to these things. To the extent that Ursula von der Leyen's speech to the European Parliament didn't cause the impact she expected. In fact, quite the opposite. Now, two of the far left and the far right have now called for motions of no confidence against Ursula von der Leyen and the Commission, the European Commission. And now these will be heard in October. Not that they will pass, but they add to this instability. And on top of this, now we have Russia prodding them by what they call stray drones going into Poland and Romania, and Poland now asking for NATO to mobilize and declare a no-fly zone over Ukraine. So Europe you don't know where to turn.
Well, I suppose from the point of view of both the US, Russia, and China, they're more than happy for Europe to be in paralysis and at the same time still having a consuming ability to buy McDonald's and BYD cars or whatever it might be. Let's go to the survey question and get a view from the room on by the end of the week, rates affecting 2/5 of the global economy, including 4 of the group of 7 industrial nations, will have been tweaked or reaffirmed. What impact will it have on oil markets? Bullish, bearish, or no change? In a way, the somewhat upward momentum of all markets seem to be in a state of ecstasy with the US now cutting rates again, the stock markets in particular. Will the Fed indeed deliver something beyond 25 basis points that might be quite bullish for all markets? Even oil might break out of its slumber at a 50 basis point move. But on expectations, it's 25 basis points. What impact will it have on oil markets when all these G7 countries tweak or leave their rates unchanged, with the bigger one being the Fed, 100% expected to cut? Bullish, bearish, or no change? Laurie, looking into the developments you mentioned earlier vis-a-vis the East Med and the Egyptian political limitations due to its dependency on Israeli gas, What about the rest of the East Med and developments there? Lebanon, we haven't checked in a while about Egypt now being, I'm going to lose track, and the next exporter or importer now of LNG. With all of that demand and need that Egypt, a country, does that trigger greater development opportunities in the region? Is there money still available for that?
Look, on the Egyptian dependence on Israeli gas, to say that it is a codependence, because if 50% of Israel's production is going into like export, that means that Israel as well is needs the market, and today the market is Jordan and Egypt. So that is that kind of codependence that we see in the region when it comes to the gas. To say that definitely Egypt is the biggest absorber of gas, biggest producer, but at the same time the biggest consumer. That's why they need extra gas. They're trying as much as they can to attract companies, to fasten, if you want, the commissioning fields, pushing companies to work to find gas, etc., so that they would become less and less dependent on that. That opens the appetite for others. So, for instance, the projects that are supposed to come online, and Charles can tell you more about that, and in Cyprus, all these projects are kind of linked to Egyptian infrastructure, to Egyptian terminals, etc. So that's like these Cyprus that is waiting for production to come, all is going to Egypt. The same, I think, for Lebanon today. We don't see any kind of, we're still waiting to see if by November companies will come and there will be appetite for that. But that could be as well, like one big market could be Egypt for that. But we don't see anything now happening in Lebanon. But there is kind of still, definitely there were projects for Israel to develop. I don't know now what will happen to Israel, because Israel, even like we've heard news saying that Israel is ready to live under isolation. And we don't care as long as we have this, I don't know, objective of doing what, but they are ready to be isolated. Is this a good sign to companies? Let's say SOCAR, the Azeri company that is about to start sort of seismic surveys to be able to start some sort of activities on hydrocarbon in Israel. Is it a good sign to companies to say, you know what, we are okay to be isolated, we don't care as long as we are doing what we're doing? So
well,
I
as
think
we've talked
there's a
earlier,
problem with Israel. There will be a problem with the economy of Israel, but that might open up the door for others, for Lebanon, for instance, to attract companies, to at least to maybe still companies coming and investing in Lebanon, because now Lebanon is out of the isolation. So Lebanon is out of isolation. Israel is going into isolation. So these are like interesting dynamics.
It certainly seems that the geopolitics are, as we said earlier, not a hurdle for these development opportunities. It's more the finances. Iman, looking at the other big news, which seems to be, maybe as we've gone through our half hour together, it's not the geopolitics, it's not the trade war, it's not the sanctions, then it must be OPEC plus supply that is the bigger guide for the future direction of the oil markets. We had the announcement last week that OPEC plus was going to continue increasing beyond September. Your thoughts on that decision and how it might play out to impact the direction of oil markets through Q4, when we're still, the dominant narrative seems to be the surplus is coming?
Yes, and I believe what OPEC plus has decided since earlier this year, and they have so far kind of gone on that same trajectory and path and plan, is that they are not going to react to what's coming, versus as opposed to reacting to what is in today's market. And as I said, the fundamentals of the day, the data that are right now basically as a kind of hard and firm, shows that the market is really tight, and the balances are not in surplus and are not building significant amount of inventories. There are so many unknowns in there, including the Chinese buying and storing into the stocks, which is not necessarily in the public domain. But things that are known to everyone and OPEC has decided to react on is that so far the latest stocks data show that we are way below historical range. Until the day that we have the data coming and showing significant amount of build consistently, not the weekly data coming out of the US, but more of a monthly and for maybe 2-3 months at least, I think we should expect OPEC to continue unwinding their cuts and putting the barrels into the market. When and if the numbers suggest otherwise, I think that's the point that they would go back and discuss and decide, okay, now what?
So as long as global inventories are below the 5-year average, notably below the sort of generally accepted data point, then OPEC Plus are safe and yes, willing to continue to increase. I mean, safe in the sense that oil prices should hold around current levels.
That is correct. That is my read.
Okay, interesting. Charles, last word for you today in terms of the context of where the Europeans are going with the US relationship, the trade agreements or not, and this massive deal they've done or the Europeans have committed towards the consumption of US energy over the coming years. Your thoughts on that being, from a demand point of view, a significant position for Europe to be able to maintain?
Well, I'm not so sure how demand in Europe is going to develop because of the economic problems. But the United States Secretary of Energy this week went out of his way to say not only he expects Europe to absorb all these 750 billion dollars of energy over the next 3 years, but it's only the beginning. He expects the United States to export even more energy to Europe, and many Europeans are now getting worried that they have gone out of one dependency and maybe they're entering another, and they don't necessarily see the United States as a benevolent friend on whom to depend for all of this energy, because that's what they're pushing for now. This week also, the Secretary of Interior went to Greece to push for this south to north corridor to enable American LNG to go into Europe from Greece into Bulgaria, Serbia, and all the way to the north in big numbers. So there appears to be a concerted effort to increase United States energy exports to Europe. And Europe appears to be unable to respond to that. It's in the sense that it's sort of semi-paralyzed with the two major countries.
Well, maybe the next thing will be that every European has to buy an F-150 Ford pickup truck in order to consume all of that energy, along with loaded with some chlorine chicken in the back. This one step after the other. But half joking, but inevitably, each week it does seem an extra demand. By the end of the week, all these rates bullish by only a quarter in the room. No change seems to be the dominant view here. This is a market that will not be woken up from its siesta. So we will go take one. Iman Nasri, thank you so much. Have a great week. Lori Hatayan, as always. Charles Elinas. And for those of you interested in Egypt, we will have the Egyptian Petroleum Minister with us in Fujairah in 2 weeks for the 13th edition of the Fujairah Energy Markets Forum. And if you're not there, well then, what can I say? Thanks, guys. All the best.
Thank you.
Thank you.